rather than leave 40 for the end.
Yeah, yeah, yeah. Then we should get away at some point that way.
Rightio, my little meter tells me that we are redirected to YouTube. So I'll wish everybody a very, very good and happy Tuesday. In my case, evening. In Ash's case, morning. And wherever you are in God's green garden, well, take your pick. Morning, evening, afternoon, I don't care. Whatever works for you guys. How you doing, Ash?
Yeah, pretty good, mate. Pretty good. We look to have a buyer's market today, so I am going to be looking to get
So
in.
a little bit of a difference. There's not the same as the last day or so. Maybe a little bit of turn.
Yeah, I think we could be looking for some buys. I mean, do you want me to take the screen, but as we start here, just so
Absolutely, mate. Yes.
we have a look at the opportunities. If you stop sharing a moment, then I will have a look.
I'm trying to get there. There we
Now
go.
we need to wait for the right price, but we've got to be careful that in markets like this, that the right price may not come. The right price is down at this daily pivot, which is around about 200 pips away, 250 pips away. So you can see the dangers of trying to get in early. You know, it might well go up from this point eventually, but it might come all the way back down here first. And cost a couple of hundred pips, so going to be a little bit tricky. Probably the cheapest one that I would go for is this one here, which is still, still 150 pips away. So if the market comes back to this point, it might be fast to come back to it. Then I'd quite like to get in and see what we've got. Let me just make this screen a little bit bigger for everybody. Yeah, I'd like to see what we got if it comes back down to this point here. Just retesting what looks like it could be something. Maybe we're getting something of an inverted head and shoulders here, and we're aiming for the weekly pivot, probably no higher than that. But when we consider that's 400 pips above where we are now, I think that would be a pretty decent target. So we are looking long, mate. Probably need a cutback of around about 100 to to around about 150 to 170 pips. I mean, maybe I could be convinced to come back a 70 if there's a decent signal here, but I wouldn't be too interested in a bounce and then go, which may still happen. Why we risk off today? I think it might just be a purely relief rally, technical bounce off the fact that we just take a breather. Yeah, we've had such a rout, haven't we? And we've got the Federal Reserve meeting tomorrow, and there may be some speculation on possibly more that they can do. Not sure what else they have in there. Arsenal, I'm sure they've got a fair bit, but might be some more speculation on that.
Tell me, has anybody cut rates whilst we haven't been looking?
No, I think New York introduced another stimulus package last night as well. And Donald Trump has expressed the want to aid the airline industry in America, which is that's the elephant in the room. You know, the travel industry is the elephant in the room.
Pressure. Massive.
Where we had, I suppose, last time it was about the banks. This time it's about the travel industry. So I guess if you've got the American president saying that he will support the travel industry, that could be a bit of a relief. Now, I won't go on too long because we want to get to the pound trade. But today, as it's bullish, if you want to do individual stocks, which I may well have to switch to if I don't get my trade price here, then I'm looking at things like in the UK, I'm looking at banks, I'm looking at financials. So I know people may not have the opportunity to trade UK stocks, but if you do, St. James Place is coming out as a bit of a winner for me. I quite like Sage Accounting as well, which is a software company. So that's a couple of stocks that are on my watch list. I am already at long Ocado, which has had a bit of a ripping results the last couple of days. But I think Ocado, we might need to wait for some earnings, which is tomorrow. So might have to cut back on that trade, and possibly Relic as well. But if you're in your own home country, I'd say banks and financials should do okay today if we do get a rally.
They've come off a fair bit, I would imagine, mate. I don't follow them.
Yeah. Obviously. Oh man, I'll tell you what. Yeah. I mean, we'll come back to this, mate, because you probably want to get your pound trade on. Market has just opened up, so let's see if we get an opportunity to buy here. It's not coming back now. It needs to come back for me to buy. You know, it may well go the way that the volatility in the markets. It may just pop to the upside and not give us an opportunity here, which is a bit frustrating. But that's the nature of the beast, and I'm not going to get tied up in that. But I will go to individual stocks to see if an opportunity arises there instead. Something that's moving a little bit slower. So I will let you take back the screen, mate. Do the pound, and we will come back to these in a moment.
Roger D. Small winner on the pound yesterday, winner nonetheless, but it wasn't anything to write home to mother about, I can assure you. Sharing, you've got to stop, mate, I think.
Oh, sorry.
That's okay.
Yeah, I thought the man in control was allowed to
yeah, it'd be nice, wouldn't it?
So, yeah.
If it was consistent, I'd be
yeah, exactly. Exactly. Don't know why Zoom shares are going that well. Can't even use the thing.
There you go. Maybe they need put some more toots out or something. I don't know.
Yeah.
Anyway, what do we got? We've got the pound hourly chart up here, and just repeat for those of you who are watching for the first time, we like to trade this as a beta test. It is a breakout trade, and it's the breakout of the pre-London session. And to do that, we take the range of the last 3 1-hour candles before London session. There is the first of them. There's the second. There's the third. So we do have a decent range there today. The last few days, in fact, last couple of weeks, we've had just pretty much the last candles being the range. But this time we do have a genuine 3-candle range. And what we do now is place a low 10 pips below the low of that candle. And we place a high 15 pips above the high of that candle, which is, of course, the range of the last 3 bars. And I will place the short first. That looks the most imminent, if you like, not necessarily the most logical, or in fact, I wouldn't like to be trading that, but, you know, anything can happen here at the moment. We will look at a pending order short stop, or sell stop, as it's is on this chart, and the entry level will be 10 pips below the low there, which is going to be at 1.2181. That will be the short entry. It'll also be the stop loss for the long. 1.2181. Stop loss for the short will be 15 pips above the high of that bar, which is bang on 1.2259. So we'll make that 1.2274 as the stop loss. Oops. And that will be, so 2274, 2181. I've got to remember those numbers. 2274, 2181. Why do I need to remember those? Because now we'll place a buy order. And it will be a buy stop. 1.2281. If I recall. And the stop loss will be 1.21, or I think I forgot. I'll have a look. 1.21 something. 10 below there. 74, no, 81, right? 1.2181. What? That's 100 pips. The last one wasn't 100 pips. Let me get this right. High of that bar is 1.2259. So we go to 1.2284 for the entry. How did I get that wrong? And the stop loss, 10 pips below there, which is 1.2181. That's where I got the 81 from.
Unbelievable, mate. You know, this is where we're at.
It doesn't explode when I'm trying to do this, because it takes me about 3/4 of an hour to set the bloody trade, doesn't it? Okay, there we go. We have the order in the market. So if you need help with that one, guys, if you're following it, look, please, it's in beta test mode, as I keep saying. There is very little risk to put on if you are looking to trade it. We are absolutely not putting our stocks on this. It's very much a case of let's test it forward, or forward test it, and see how it goes, and we'll come back and make a decision on whether it's tradable or not as a system or strategy. Sorry, mate, you were about to say.
Yeah, I was about to say, yesterday we had a limit down on the US stocks. Today we got a limit up, which just kind of like, just goes to show how much volatility we have out there, and how fast the market is moving. When there's a limit down and limit up, it means it's crashed down 5%, or I think the next is 5 or 7, and then 13%. So they basically do limit moves if it moves more than that amount in a day, and we've got the futures now with a limit up on
I see on Bloomberg this morning, and I watch Bloomberg when I'm doing my morning show, or just before I'm doing my morning show. They were saying that yesterday was the worst day for the S&P since 1987. We all know what happened in 1987.
Crazy, isn't it?
Yeah, I didn't see that in the charts, frankly, but
I think because the gap, it wasn't really that evident. But if you bring up an S&P, you don't see that, do you? Okay, actually, I don't even have a gap on mine. Mine's just a big solid red bar.
Well, that's it there, isn't it? That's yesterday's bar.
Let's have a look what you got. Yes.
So what are your highs and lows? The high on this bar is 2608, and the low is 2383.
26. I've got 2670 high. Oh, the high. Yeah, 26 and 2355.
Okay, so you've got another 100 pips on that. So what about 2 days before?
Yeah, good point. 2770 goes down to 24, unless it means actually when the S&P is open.
Yeah, maybe.
So we're looking at the kind of futures, aren't we? So maybe when the S&P was actually open, that was the situation.
Okay, more than interesting. No, not for me because I don't trade it. But look, it's a mess, isn't it? But to be fair, if you've been in the S&P 500 for the last 12 years, you're really not in a position to complain about this, are you?
If you've been long the S&P?
Yeah.
Yeah, and I suppose that I don't understand why these companies wouldn't have. Well, I suppose in fact they must have had stop losses in play, otherwise they wouldn't have. It wouldn't have come down quite as it has. And that's the key, isn't it? As long as the stop losses are in play as the market goes up, and they've managed to secure their profit in. I agree with you. As this market drops down, then okay, they're not going to continue to make the money that they were making, but they probably have managed to secure themselves no losses for this period.
Mate, don't you kind of, in my opinion, in 2018 you just cash in and go on holidays, don't you?
You're absolutely right. Yes, and this is the thing, and I think this is probably exactly what has happened, is that people have started now going towards cash, which is why we've seen gold under stress as well. So yes, I think that's exactly what you would do. You would just take your money and run for a bit.
And certainly when you saw this one, if you even hung in until 2020. As soon as you saw that one, you cash in and go on holidays, I think.
Yes. I think you're probably right. I think you're probably
Otherwise,
right.
Otherwise, you're in how greedy am I? Really, at the end of the day.
Yeah. Just not necessary, is it?
No,
to be involved in this. I mean, it is. As we know, this whole thing has been unprecedented. But I guess, part of it as well is that everybody's trying now to get the best possible price to go in. And I have to say, it got to a point yesterday where I was thinking, you kind of may as well buy this, because it might take a while to come back, but not on a long term. In fact, sorry, not on a short term perspective. But if you were looking for long term trades, everybody's worried about the fact they might miss the bottom, and it's possible that this still comes back another possibly even another 10-20%. You know, who knows? But it's going to get to this level at some point in the next 5 years. So if you had enough money to sit there for 5 years, then you may as well start to buy up in this area. I mean, we've come down from the highs in the S&P. What are we down? We're down over 1,000 pips in the S&P from 3,000. You know, 3,500. So it's already down a crazy percentage. I can't kind of do the maths that quickly, but it's already down a crazy percentage. And the same with the FTSE. The FTSE is now down from 7,500 all the way down pretty much to 5,000. So that's lost what, a third? That's lost 30% pretty much.
Yeah, that's pretty much across the board. Yeah,
that's pretty much across the board. So you know, when it comes down to it, why would you? And this is the thing: if you've got the money, why don't you just buy it here, just go on holiday? You know, if you've got the cat, in fact, you can't go on holiday. No airlines are traveling, but
yeah, you certainly just holiday next door.
Yeah, yeah, but just turn everything off, because you know in 5 years' time you're probably going to be buying your own island, because the market will come back, and it will take a while. But I think you would have to look at 5 years' time.
Yeah, I think the one thing every investor would say, and I'm not talking about traders, I'm talking about investors. The one thing every investor would say, that the stock market, any stock market, has always put in higher highs and higher lows.
Yeah, exactly.
And that's been the case, like in spades, for the last 12 years or more. And you know, like I said, if you're investing in the stock market and you've traded any indice over that period of time, you're not going to win. Well, you shouldn't whinge, and you shouldn't be in the position where you've allowed this to go back 30%. That's a fact. You know.
Yeah. Agreed with that, mate. Agreed with that. I mean, as we speak, the FTSE 100 is starting to cut back, and I will be, putting myself in a position where I'm going to be starting to go in pretty soon. I don't know whether it's at the price that I want. The problem is, it's not the lowest. Yeah, let's have a look at the charts. See what you think about this.
G'day, Chandru. G'day, LT. It's not lost right, Ash. People may cash out. What's your opinion? It's not lost right. I think we've basically just covered that.
Okay. Yeah, could I have the screen, mate?
No. This time, so I get crashed out when I stop sharing, but I think this will be okay.
There we go. We're in. So this is what we got. We got a stock market now moving back to the downside, and I have to say, I just quite like it. This is the first level, which is the problem, and actually it's only really appearing on a 15-minute chart. If anything, you know, there is a level of support here, right on there. So we're getting a small bounce in this area. Is this the area it actually ends up bouncing from, to give us a significant tradable entry? Difficult to know. I'm going to say I'm going to sit it out just at this moment in time. Slight warning with the move on the 5. You know, there might be just about enough momentum to keep this moving to the downside. But you can see on these short-term timeframes, this is an area that it will very likely bounce from. Does it stop here and turn around?
If I'm looking at that chart, and in probably 1 or 2 time frames up from there,
yeah,
I'm seeing a flag as well.
Yes, mate, I totally agree. Yeah, got you.
So if it got underneath that resistance and support, is that a sell signal?
If you get under here?
No, even up higher.
Up here,
yeah, under that confluence.
Do you know what? No, it wouldn't be actually.
You want to get right down to the bottom. Yep. Okay.
Yeah, the buy side on this one is right the way down to the daily pivot. You know, there's still that would still be a buying opportunity, and a much better one, because it will close this gap.
Yeah,
sure. And it'll have some room to go. But the reason that would be, I wouldn't really want it to close here, to be fair. But I wouldn't mind price coming here and bouncing, because if it can come down there and bounce and effectively end up at least above this point, but preferably above this point, then we still have on a let's have a look at this on an hourly chart here. get rid of these lines for a moment. If I can. There we go. We still have, we're talking about the daily pivot down here. We would still have this as a resistance point, and really we've kind of hit a higher high here. So comes down here, it would still qualify as a trend continuation when we kind of look along this particular trend line here. No, we're talking about a trend continuation in a massive trend to the downside. So you know, no question that it is tough, you know, to kind of, you know, maybe get in down here, sort of like for everybody's psychology. But you know, it comes down to this point. We had, now this is the bar that we were talking about yesterday that was manifesting itself off the 5-minute charts in the end. You remember the 5-minute hammer we were talking about?
Yep.
And it really did actually provide us with a genuine bottom. And this is the interesting thing about these short-term time frames, is that, you know, that 5-minute chart, if that trade was taken, then now, you know, you're kind of you're already well and truly in the money. You're already up 2-1 off a 5-minute chart. But you know, there's no doubt about the fact that we've had such a significant move to the downside that would be a pretty dangerous and probably quite a silly trade on the whole. But it did actually provide us with quite a lot of information to start with, and I was really tempted yesterday. And you know, the only reason I didn't take a trade yesterday, and I wasn't going to take it straight away because I wanted to see it develop, but as the day wore on, I was watching this price action and going, I think this is worth getting in. But the reason I didn't take it is that my broker has not yet provided me with the June contract for my futures, which means I'm going to have to pay if I get rollover, and I just don't really want to have to pay. So today, I've just looked again, and they're still on March. Now, it expires tomorrow. So I think they're very late, you know, and I would not advise anybody use them. It's a company called ETX. I don't know if you're allowed to say this on air, but I'm going to. And they are awful. Their spreads are wide. They have terrible, what?
I'm just reading Paul's email about that one.
What? Don't mention brokers.
No, I don't know. I've got no idea. We'll find out.
Yeah, they're slow. You know, they have still, as I say, the March contract, so you can't actually kind of like look at the June contract. And I just think that they are, you know, one of the worst. But, you know, and everybody's question now is, why do you use them? And the reason I use them is that I've got 2 brokers in the UK, one called CMC Markets, who I really like. The charting software is not very good, and ETX is the other one. And the only reason I've got 2 is that I've got an investor account, and it's the only other British broker I can find that I can trade the stocks on, trade the range of stocks that I need. So that's why I'm using them. But if anybody can suggest to me another one, not IG, by the way, because they're even worse, then let me know, because I wouldn't mind finding somebody else and pulling my money out of these guys.
Mate, got a question for you.
Yeah.
If I'm trading the 5-minute charts, and I never have.
Yeah.
I'm seeing the second hammer there. Far smaller.
This one?
Yeah.
Yeah.
Do I trade that or don't I? And if I do, where do I put my stop?
No, you don't. And the reason that you don't trade this one, and the reason that I wouldn't call this one a hammer, is that I would suggest that this is really part of this range here. I think this is all part of one range. This area here.
Break there, I've got to tell you. I'll point that out to you in a minute. But
yeah. And because it's part of because this hammer is also part of the same range as this hammer, then it's no longer a hammer.
Okay.
Because really, because the hammer needs open water. To, you know, for this to be sort of significant, for the move back up to be significant, it needs open water, and this hasn't got open water. If this had happened in a trend like, let's say this one, you know, well, no, that's not so good even, actually. the problem is a hammer has to be the lowest point in the range.
Yep.
I suppose maybe that's the best way to put it, and not the lowest point in the whole chart by any stretch. Otherwise, you're only going to see one hammer in every 8 months or something. But one hammer, in the range, and I just think that this is part of the same range. So so this one qualifies. This one is just a reversal bar.
Can you draw a trend line from the high, the second high after the hammer, the big hammer?
Yeah.
That one, yep. Down through there. Yum.
This break here?
Yeah, there's your right there.
Yeah, there was a really good one yesterday that I was. Yeah, I mean, I don't know whether we're sort of.
For me, I'm talking my stuff,
Well, tell me what do you think about this one then? Because I noticed this one yesterday. If we're basically talking about a break and a retest here, what about this one? Breakdown here, retest here. That was the bar I was watching last night.
Yep. No
really nice entry point. Yeah. So we are at this stage. We are actually continuing to move to the downside, which is fantastic. And I am going to take this trade. If this comes back down to this daily pivot, I'm going to take it. No question. I think we are now still 100 and so pips away from that particular point, which is not ideal. But I am interested in taking that entry if it is there. There's no doubt that that stocks are struggling, and it's it would appear to be quite a dangerous trade to take. And I don't want to sort of like get into it has to bounce eventually, because of course it doesn't. It doesn't have to do anything. But I just suspect that we probably are at a point that we could start seeing a bit of relief. Now, that doesn't mean I don't think we're going to be back down here at some point, because I think we will. But I think that we are possibly in a kind of zone where we're starting to see a potential bit of relief. And I think the hammer that we saw yesterday on the 5-minute chart got followed up by a 15-minute hammer as well. And it to me is starting to look like a fairly strong area down here that could hold. Now, if it comes down there, you might still be looking at a 240 pip stop loss, with the option to get out if it starts to close under this trend line, which is the way I'll play it. So you by default you end up going in quite light. Even if you sort of like risk 0.5% here at 200 pips, if it closes under this level at 50 pips, then actually you're only looking at a fifth of 0.5%, if that makes sense. I don't know whether that's that well explained.
You probably seem to say that the same. Chloe's exactly the same. She says a 0.25% instead of an 1/8%.
Sorry, say that again. 0.25% is what?
Is an 1/8%. So why not say?
Yes, 1/5%? I'd agree with that. But what's a fifth of a 0.5%?
That would be a fifth of a 0.5%.
A tenth?
Yeah, it would be a tenth.
A tenth. Yeah. A tenth of a percent. Yeah, no, I'd prefer to say that as well.
Now I know the reason. The reason is you don't want to do the math, right?
Exactly. Exactly.
I got it.
Exactly. That's all it is. The grey matter does not want to perform at this time or any other time of day, to be fair. So
now you've got a truckload of questions to answer in there. Are you done for the moment?
Yes.
Right. Okay. I'll pass on a couple of positions that I'm in, and then I'm going to go quickly around the grounds because we seem to forget to do that.
Yes, we do. Okay. I'm going to stop sharing and back to you, mate. And if a trade shapes up this end, I will let you know.
Okay. Let me see what's on offer here, and I'll get. And guys, again, I only look at the majors in this session. Why? You should have learned that we only have time for that. I can't go through every cross that I'm looking at, but if you want to have a look at the crosses that I am looking at, then you need to go to Ash and myself's Dropbox. And I never have the link for it. My apologies for that. It is.
I'll put it in now.
It is. I think it can be found in the Telegram group, which is Ash is giving you a link for that somewhere. So I only do the majors here, and I think I've got two positions. One of them is this one. You're short, and if you've been in the show for a little while, or in any of my any of my broadcasts, you will know that I was a bull euro dollar to here, and then it just kept going and going and going and going. And I thought I'd get taken out here, but I must have just got my stops in a perfect position. And we took really most of this. We got out on a trailing stop around about this area here. Now I'm completely the opposite and missed the entry. I'm so peeved that I missed the entry on the way back. The euro is one of my favorite pairs to trade, obviously, and over time I've spent most of my time analyzing this pair. And whilst I just had it in my brain and my mind and everything to get short this, I missed the entry, as I did this time. I'm just so peeved with myself. Getting the longs, not getting the shorts. Timing, it's all about timing. So anyway, what I see is we're back inside this descending channel that we've been in for the longest time. And perhaps now, if you wanted to trade this on the weekly, you would wait for a retest of that and maybe trade it on the weekly chart short. The only thing that I see right now is a potential false break of that channel. Let me go as wide as I possibly can on the daily chart. And we had we probably had two of these, a little one here and a little one here. This is a massive breakout. And I said a couple of weeks ago, or was it 1 week ago, I can't recall, that I didn't believe that this this channel would be broken, and seriously broken. I was wrong with that, absolutely wrong, but I benefited by it. It went another 285 pips, bless its cotton socks, I've got to say. But at that point, I was absolutely saying this has got to retrace and go back into this range, which it has now done. So now we're back in here. What do I do? Well, same as I do every single time. When I'm at a resistance level, I trade to support. When I'm at a support, I trade to resistance, blah, 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 blah. So this is now what I consider to be a false break of that channel. And for that reason, I look for an entry. And the entry that suits me right now is on the daily chart. And it is the, I guess, textbook, if you like. If I ever write one, it's my textbook of how to trade this false break. So we've had the break, we've had consolidation, we've come back underneath the resistance area that we've been looking at, and then we've retested it. The only issue I've got with this is the size of the candle. It's just massive, and I hate it. I really hate it. But the setup's there, and that's what I said to my guys this morning. It's 185 pips, but I don't think I can even trust that to be the candle stop loss. I've got to get outside of these areas, and I think I was talking about this yesterday. You've got to give these, sorry, you don't have to do anything. I've got to give these swings a little bit of space, because things like this happen. Take it out, bang. Take it out, bang. And I think that's the kind of market that we're in, where these highs are vulnerable to the next move. And the next move could well be this one. So we could get taken in here. Then the next move comes that way. I've got the weekly pivot here protecting me, but I want this high to protect me as well. So that's why I've placed my order short underneath that, underneath the swing actually. And my stop loss is above this swing well and truly, and actually above that channel at that point. If you want to know the levels, yeah, okay, I'll give them to you. I'll give them to you a little bit later, but right now I don't have them. I'm not trading this on this account. Obviously, I'm trading on another account. So I am keen euro dollar short, but it's not the best trade in the world. Why? Because you've got to take profit here before the monthly pivot. So you're risking 200 pips, and your first take profit is at around about 75, something like that. So it's not great on a risk to reward basis, nor is it great down here. You've only got 1.25 to 1 by the time you hit the big swing low. it's not a great trade, and that's exactly what I said this morning. But if you really must trade, then that would be the only one that I could point you towards on euro dollar on the majors. I do have another one on the minors, and look, I think I'll share it with you. It's dollar yen. Well, it's not a minor, is it? Was it dollar yen? Anyway, it's probably gone now. And I was looking at the daily chart. And in fact, I'm not even going to tell you because it is gone. I'm going to cancel the trade, but I was looking to trade it short. And I've actually changed my mind on that. And the reason I've changed my mind on that, you can see where we are. We're absolutely middle of what I call a range, right? Sorry, I'm swinging from chart to chart. The big picture here is really not that clear unless you go macro, really macro, and look over here and find, I don't know what, lower highs, lower lows, lower highs, lower lows. But when I look at this chart, this is the monthly chart on a big spread, if you like. Spread's the wrong word, but I'm seeing that. It's a massive inverted head and shoulders. And I don't know for the life of me why I would be thinking long dollar yen in this environment.
Do you know, I'd go even further back. I think that left shoulder even might even start the last low.
Yeah, it may, mate. Yeah, that's true.
And that would probably mean that it's got a little bit longer to establish that right shoulder.
Yeah, I can't go any wider, unfortunately, on this chart.
No, I don't think you need to, but it's just that that left shoulder took what, July right up until, goodness me, that's 7 years.
Yeah, it's taken the longest time. It really has. So I think it's a tough one to gauge, and I think the market's probably telling you that in the last couple of days as well. Look at the bars in the last 2 days. They've just been crazy, and I won't say random, they've just been crazy. Down to Billio, like off how many pips? We've come off 1,000 pips and gone back 6,500 of them. Crazy stuff, really crazy stuff. And we're, as I said, we're right in the middle of that descending channel. So it does make it pretty difficult to actually get into the market here. And I'm not really confident that I was right in the first place, but I have since cancelled that order anyway. So it's really a moot point. I think best left alone, frankly, dollar yen at the moment. Pound US dollar, well, if I'm to analyze this chart, I'm thinking let's go macro again. And what I see here, apart from this massive bar last week, is a very strong base. If I go just a little bit wider, you can see that we haven't been here for the longest time as well. I'd really like to see this tested. Am I willing to trade it to there? Yeah, I probably am, but certainly not on the back of that. I want to see a decent retracement before I did. And is that available to us? Maybe. Is it a trade? Maybe. But I'd want to see something off this level. So maybe higher low here gets me interested back to the weekly pivot, but that's about it. I wouldn't like to go beyond there. Then I'd be looking to trade it short. But again, only as far as these big lows that you can see here. So the level, I guess, is, let's say in there somewhere, around about the 120. Let's call it 120, shall we? 120, 15-ish, between 120 and 120.50 anyway. So I can totally see that happening. But better than that, I'd much rather see those lows taken out. When I see those lows taken out, I think I said this yesterday, every single stop that is in that area of people who are long already is under here somewhere. So if those lows were taken out, wow, there's some liquidity there, I can assure you. And that's when I think I'd rather be in the market long after that happens. But yeah, certainly looking for potential higher low here. And if that were to happen, happy days. Aussie, yeah, look, it's been just under the biggest pressure for the longest time. I think, and I still think, that we're on a level playing field here, better than we have been for the longest time. Why? Because of things like bushfires, and then we had coronavirus in its early stages, which looked like hurting the trading partners more. And I know everyone's trading with China, but Australian economy relies heavily on its trade with China. Commodity prices are big things. If you have a look at the relative strength of currencies against the US dollar over the past maybe 2 months, you will see that there will be a very clear picture that the Canadian dollar, the Kiwi, and the Aussie dollar have performed worst of all currencies. And that's no coincidence. That's all about commodity prices, and it's all about trade with China as well. So that's why I was a very strong bear, the Aussie dollar. But I think now that coronavirus has, let's say, equalized around the world, then I think we're on pretty much a level playing field. We being the Australians, right? And I'm talking about the Australian dollar, but I'm certainly not seeing that in the market yet. All I'm seeing is continued selling. It just sells and sells and sells and sells, and really no big pullbacks of any kind of way, shape, or form that you can look to get into this. I think those of you who have been in the show for a while and certainly following my TTR shows, Aussie Swiss, and I'm talking out of school here, was the best, once it broke the level, best chasm I have seen for the longest time. We're in one now on Aussie US dollar. It is a massive hole. And if you look at Aussie Swissy, you will see the hole that we're in on Aussie Swissy. Go back to 2014, 15, where the euro uncoupled from the Swissy. We haven't seen anything like that. If you have a look at Aussie, and I'm not, well, why do I talk about it and not show it? Let's show it. When we were here at this level, my analysis was that if we broke this level, the Aussie could go anywhere against the Swissy. This is the decoupling of Euro Swissy. There's nothing. There's absolutely nothing underneath this pair until we get down to here. Am I saying we're going to? No, I'm not. But what's going to stop it? Question mark, question mark. And I got out of this. Well, I didn't mean to get out of this. My trailing stop was hit. Wow. I could be making mega bucks right now if I'd stayed in, and I can't get back in, obviously, at this point. So they're the kind of things that I'm looking at, those big picture things. And if those levels break, then wow, you're off to the races. If they bounce, you should also be off the races, as long as you get the picture and the market tells you. And I'm off bases, I'm looking for lower highs, and off peaks, I'm looking for lower highs. So it's a very simple formula for me at the moment. And until I reach these levels, we've just poked through that, I think, really on dollar CAD. So I'm looking at that one as well. Why? Well, I think that level is probably in this vicinity here, the ultimate high, but we've also just passed through this strong level here. So I think I'll let it go to there, but at that point I'll be looking for a bounce, lower high, look to trade it back. Dollar Swissy, look at that. You know, that's at a strong base right now, and it's repelled off that base already. Big retracement. So I don't trust that to trade, but it's got to pull back and give me that higher low that I'm looking for. Then I can look to trade it. Kiwi US dollar. Yeah, look, interesting, really interesting. And this more than others, I think. And the reason is that it's actually come back and matched this big spike that we got early in the month. And I don't know why. I can't remember the reason for that, but it was obvious at the time. We've come back there and we've rejected it again on Kiwi US dollar. But like I was saying before, if we can take out these long-term lows, and I better go to the monthly chart. If we can take out these long-term lows, and that's probably around about that area that I'm talking about. If we can then put in a bit of a reversal and a higher low, that's where I want to trade. Because as I said, there's a lot of liquidity being gained in this area here, because there will, anybody who's long at this point has got their stops here, and we've just taken those. And that's what I mean by liquidity. I think if we can get back above there and put in a higher low, I want to be long the Kiwi. So, mate, do I have any trades other than the positions that I've got? No. But, it's still the same story. I just have to wait for those levels to be hit and potentially broken, and then look for the way back, the bounces on the way back.
The FTSE has just hit the level that would be an interesting buy zone. If you pass me the screen a minute, then we'll have a look at it. This is the area I'd like to buy in. Definitely a difficult trade. Yeah, it's right the way down there now. Momentum to the downside has been pretty grim. Is the only problem here. But let's have a look and see. We're going to ignore that one. This is a problem. I have to say the indicator is a huge issue here. It really is, but it's probably early enough in the picture. I think I am going to wait for a little 5-minute bounce here, and if the 5-minute bounce comes, then I'm going to speculate and take a trade to the upside. The chances are, if I get any upside, I will probably use it for a move back down again, rather than a wholesale long here. But let's see if the 5 can bounce, and if it does, then maybe we can get into this market. But the move to the downside has been, it's taken a lot less time than I would have liked. So I am going to set this trade up anyway. You won't see it on this.
I'll stand for a couple of questions. Chandru, we have a daily bullish engulfing chances to push up, right, Jeff, euro dollar. Yeah, look, I see that candle, but that candle to me speaks of an opportunity short, mate. Why? Because it is the retest of a broken longer-term trend line. If you have a look at the monthly chart, I think, and I'll go back to it. If you have a look at the monthly chart, which was broken with that beautiful trade that we got into a few weeks ago, it's now come back underneath that and retested it. So that on that basis, I think there's opportunity to continue the short, not for a long way. I've got to say that, but I think that's definitely a possibility. Am I still bearish the Aussie? No, I'm not. I need to see a big retracement now, and even potentially a bit of a turnaround. But I'm not going to say we're at the bottom by any stretch. No. Have I heard of Ichimoku analysis? Yes, I have. What do I think of it? I've heard of it. That's all I think of it. I don't need to go into other areas that are indicators or other analysis processes. So I can't help you there, mate. No, I don't know anything.
I mean, I'll make a comment on Ichimoku, because I don't use it myself, but I do know somebody that was using it very, very successfully. And the thing about Ichimoku is that it works just like many of the other indicators in specific environments. Now, when I was getting kind of shown it, it was
and to be fair, like any strategy, they don't work on every single occasion.
No, they don't. No, they don't. Right, now that bar looks okay to me, mate. So I'm going to enter at the top of this bar here.
Right, mate.
104s. I quite like that. I mean, you know, we've I'm going to get in here. So I have taken a trade to the upside in the FTSE, and I'm just making sure it's triggering on all accounts here. There we go. Right, I've taken a long in the FTSE here. I like that, but I like the reaction, you know, and I particularly like the reaction towards the end of the bars timing. Now, really, to kind of like be hyper safe, you can go right down to the bottom, and the way that I'd be thinking about this is if I get a close under here, then I want to be out. And in this current environment, it's only probably a 60 pip stop loss or something like that. So it's actually not too bad a stop loss that would need to go in here. But I'd quite like to, like to let this establish itself. What I quite like about this is the fact that when I look at this, and I'm using it the indicators because you know you get used to certain indicators. But what I quite like about this this particular price action here is the indicator. It certainly kind of like looks pretty negative right now under this particular point. But what I'd like to see is whether the last 15 minutes. Now, if it doesn't happen, I will change my opinion. But in the last 15 minutes, if we get a push back to the upside, what we'll see is this indicator just nestle itself around about the 50% mark, just above this trend line. So, so that's another reason that I quite like the long here. So I am long FTSE. We got in at 51.07. And we are just going to wait and see what happens. And if the market closes under the pivot here, then I will be taking the trade off the table. And I'm just trading a relief. Now, I'd quite like to get to this weekly pivot, but the chances are we might well have to take, well, we will have to take something off the table here if we're really sensible. If this comes back up to this this point here, that's going to be a nice 200 and something pips. So that could be a 3/4-to-1 trade just to the highs of this small range. And if it can get up to the weekly pivot, then we could be looking at something like a 10-to-1 trade on whichever portion we leave back on the table. But yeah, taking the long in the FTSE here, mate. There's our trade in the market for the day. If it goes, it goes. If it closes above this point, then I am out and not going to worry about it too much.
Cheers, mate. Happy days. That's you set for the day. You've got some management to do, perhaps. And I'm going to show you one thing that I really didn't spend too much time on. And I think we can probably call it quits after that if you wish, unless there are more questions that we need to answer. So let me take the screen.
Yep. Okay. There you go.
Okie doke. Kiwi US dollar is starting to look really interesting. I said it before, but it didn't look that appealing on the daily chart. But I repeat what I've been saying all along. These big liquidity pushes down underneath the obvious swings really do appeal to me. Maybe it's got a little bit further to go and maybe take out these, but I'm starting to see signs that this is able to reverse. And I'm seeing them. I said to you before that we'd match this low of that massive spike down was it over the weekend? I can't remember, was the gap on? It was certainly early last week. Then I'm drilling down into the time frames and beautiful little tweezer bottom sitting here to match that, and potentially a higher low sitting here on the 4-hour chart as well. It's not there yet, but potentially it will be. Then I drill down to the hourly chart and I see a clear double bottom and potentially a higher low. Do I want to trade that bar? I don't think I do. But I've got to tell you now, it's one of my favorite bars. And I'll tell you for why. What we've got is a clear potential reversal pattern. We've also got a clear potential higher low. Is clear and potential the same thing? And probably not, but that's an interesting way to go. what you are faced, or the dilemma that you're faced with here is this the right time or is it not? Is this going to be the higher low that leads us to this level here? And that's an answer that I really can't give you until it actually occurs. What I can say is if it doesn't get taken out, and I'm on an hourly chart here, if that low doesn't get taken out, then the prospects of this going long are enhanced incredibly. The other thing I'd say about this, if it were a buying bar, I wouldn't touch it. But it's not a buying bar. Not by, well, it's closed lower than it opened, right? Therefore, to me, it's a selling bar. But this is what I like. As I said, if it was a buying bar, I wouldn't touch it because it's too obvious. But here it's not so obvious because it's a bit of a selling bar. So it's nice. I like that scenario. I think it's great. It's a high risk trade if you want to take it. But I'm very, very tempted to place an order above this bar here. Your stops, well, really, they've got to go there because if I'm wrong there. If that low's taken out, I'm wrong. I'm totally wrong. So I think there is an entry here. I'm going to take it. I'll place that order for you. But I'm going to place it at very low risk. And I'm going to tell you why. Because it's very early in the piece. And if I'm wrong, I'm wrong. And I'll get another opportunity to trade that. But I think that's definitely a worthy proposition to take, with the expectation that if I am wrong, I'll get another opportunity, right? So I'm going in light, only going in at a quarter of full risk. It'll be a buy stop, as we've got here. And the level will be break of the high of that bar. So 60.39, let's call it 60.41. And stop loss, there's absolutely no point, as I said, going under here, because if I'm wrong here, I'm wrong. And it will be at the low of that candle. 60.17, I'm going to give it a little bit of spread space, although the fills on this fusion market are very good. I'll still give it a bit of breathing space. I'll call it 60.16. Okay, and where will I take profit? Let's place the order. Look, the daily pivot's been broken and retested and rebroken, so I'm not that concerned about the daily pivot. What I am concerned about is the high of the day, and that's represented by this candle here. So I would get my first take profit underneath that. So let's call it there, actually, because you can see there's a strong level here as well. So there's our first take profit before we hit that strong resistance. We'll call it 60.77, shall we? That'll be my first take profit level, which will give us I think that should go away. Our risk here is what? 25 pips. Our first take profit is well above that. So we'll be doing okay if we get there. What I would do is I'd move my stops to entry straight away if we get to that level. Then if we're super, super lucky, we'll get through this level and we'll hit the monthly pivot some 269 pips away on a risk of 25. That's about 10 to 1 as well. That's why I'm taking this trade. If it takes out the low here without triggering, cancel the order and look for the next higher low, right? That's my cancel here. There you go, Ash.
Cool.
Potential entry and got nothing to do with Ichimoku. So, Chris.
Yeah, a few questions about Ichimoku on the old YouTube group, hey?
How you doing, buddy?
G'day, mate.
G'day, guys. How you doing?
Yeah, pretty
We're
good.
having a fine old time as usual.
Sounds like you are. I was just thinking, gosh, some good numbers. Watching in the room on YouTube today, had some interesting questions. It seems to have all kinds of variable stuff in there.
Mate,
Yeah.
What's
we
an Ichimoku cloud?
like to cater for varied people, you know that?
Yeah, indeed.
You snuck
What's
back
an
home
Ichimoku
in time,
cloud?
eh? You're not in
Oh, mate.
self-imposed
No,
quarantine?
no, I got home Sunday afternoon. It was fair to say it was the fullest flight I've flown on for about 4 months.
I'll bet.
The flight's all empty, and all of a sudden, you've got to be back in to make the quarantine, and it was packed.
Yeah. I dare say you're not going anywhere anytime soon.
Oh, I'm not sure, mate. I might go back to Asia. I don't mind doing the quarantine if I might go up for April for a couple of days, maybe spend 4 or 5 days in Singapore and then come back and quarantine back in New Zealand. See how we go.
You're a brave man.
We actually. Oh, the funny thing about it, I say this all the time, Mike, I feel a lot safer in Singapore than I feel in New Zealand. The Singapore authorities are all over it. They do a great job. New Zealand's done an awful job, and we're very lucky that we're isolated in New Zealand. We're far away from people. I'd far rather be in Singapore where the tracking is unbelievably good. The people do, everyone's conscious of it. Everyone's aware of it. No one takes it for granted. It's only just starting to be taken seriously, really, in Australia and New Zealand in the last week that I've seen. Full credit to Asia. You do again. New Zealand doesn't have as many people come through, but we are very lucky not to have had more problems in my view.
Yeah, you just have to pack a few more extra pairs of undies, mate. You mightn't get back till Christmas.
Yeah.
And I think that one of the good things about coming home, Jeff, is people always let you come home. You can't always get out, but you can always get home.
I'll take your word for that.
Says the man. You're not leaving Tasmania. Actually, haven't you been away?
Yeah, well, I'm supposed to be away this week and next
Aren't you
week.
taking loads of toilet paper with you?
I'll tell you what, I'll be very popular if I did. But no, I'm not. I've still got enough stock left for another 3 weeks, I reckon. But after that, dependent on the demand, and it's crazy. I'm getting orders from all over Australia at the moment. It's just ridiculous. But I'm not sending any out of Tasmania. I'm remaining Tasmanian.
There's a question in there about Ichimoku, and I think it's a really good question because someone says, have you heard of Ichimoku? What do you think of it? And the thing is that I've got no idea on Ichimoku, and I'm not about to learn. And one of the things I find is that people who are struggling look for 50 different, every single option. And I don't think that any of these things don't work or any of these things do work. If you work with them, well, that's not true. Some of these things just don't work. But most of these things will work if you work with them and practice and become good at them. And at some stage, you've got to stop just searching for every possible fad on the internet, because that's not what works. Ash, the stuff you do as a trader, how long have you been doing it for?
Oh yeah, I mean I've been doing it for a long time. I understand my indicators very, very well. And I completely agree with you. As I said before, I know somebody that uses Ichimoku very successfully, but it works in certain types of environments. So what it's there to really illustrate is trends. So if you are good at reading price action and that's the way that you establish trend, then you really just need to stick to that and keep refining that particular skill. But if Ichimoku speaks to you, because when I was showing it, I have to say it looked like a mess to me. But the guy that was talking about it was waxing lyrical about it. He absolutely loved it. So if that's what speaks to you visually, and that's the amazing thing about all the tools that we have, there's so many options out there now that you should find something which manages to just unscramble some of the confusion. So if you're finding that it's unscrambling the confusion, then I would use it. But if you find it, all it does is confuse you further, and you have to really kind of, get in amongst it, and you find it a little bit painful to learn, then I wouldn't bother with it because it's just, it does become a waste of time. Not Ichimoku's a waste of time, but trying to learn something which somebody says is amazing, which doesn't really speak to you, is a bit of a waste of time, which is why I don't use it. But, but by all means, if you like it, then I would use it because it does work. I have seen it implemented and it does work.
Mate, we're going to be launching, I think, a test group next week for a new strategy that we think will take over as our introductory strategy at ATW. It's been a while in the making, Jeff. A bit of help from some of the senior guys, but I think one of the things with it is that, what we've asked them to do is to make trading so simple that beginner traders will get it right. And it's taken them a while, and we've been working away at it for a little while in the background, but we will put it to test group. I've got to say, I've my first trade on it has been just the right, just lucky, the right trade at the right time. I think it's up 80%.
Daily shot?
It's just purely luck, It's not. It's a small account too. Like when I say it's not a real number. Yeah, daily chart stuff. Although we'll be able to transfer it through some other stuff in time. But we're going to teach it on IFP as a daily strategy. It's going to really, I think, help clarify trend and cyclicity and some entry criteria. One of those things that there are different types of people. The big picture guys, they'll like the picture, and the detail guys. Some of the detail on the strategy is quite tidy. I'm really excited. I've been waiting for a little while for it, and we've been in development with it for maybe 6 months, and looking forward to getting it out to a small group. Obviously, it'll be actions for those in the room that are just joining in to watch. You're welcome to join and watch this show, and it's great. But the new strategy will be launched into Actions 12 database. It'll be picked up by some people who, a variety of people across all kinds of ability, people who obviously are only in our communication areas, people who are in outside chat groups, etc. We can't have them sharing our new strategy, so we can't run it on YouTube or anything like that until we get it established and going well. But we like it. It's got some good backtest results. It's clever. The guy that sort of headed up for us.
Sorry, guys. I don't want to cut you off just early here, but can we just quickly talk about this trade management, because we have had a new signal here that we need to discuss. If you could pass me the screen, Jeff.
Happening.
Okay, so really, when the picture doesn't match the opinion, then really the opinion has to change, and the picture has not matched the opinion. So we were looking for a bounce at this level. Now we're still at the level, so I am still really anticipating a bounce. I would still expect a bit of a bounce here, but this is a problem. The fact that we have now cut under this trend line on the hourly is more of a sell signal now than a buy signal. So what is the next the highest probability that's to happen now in accordance with this is that we now start to stretch our legs back on a 15-minute chart and find an area to short. Now, I'm not going to go short. Actually, in saying that, if we got this long in, maybe we could. Let me just see how tight that'll be. No, it'd be too tight. It's going to be too tight to go short. So we can't really do that. What we would want to do is, with a long in the market, as the price pushed up, we could take the short, hedging the long, and then put the long at break even. So as it came down, it would take out our long and it would get going. But what we'd want there is, with the long to go at break even, we want the short then at break even to mitigate any bounces, any vicious bounces. We could play it that way, but it's a little bit complicated. So it's probably better that we either get out of the market here, which is absolutely fine. The picture has changed, or, which is my preferable way to deal with this, is just see if we can get a little pop to the upside here. And if we can pop to the upside to around about this level, then we'll just secure those stops at break even, just in case, because obviously indicators are just there reflecting price. We know that they are not 100% accurate. So what may well have happened is that we might have, especially with a market as we have, but what might well have happened is that the indicator may just have got a little bit out of sync. But if we put stops at break even, then it won't matter, because if the indicator then starts to pop back into positive territory, we will already be in the trade to the upside. So let's see if we can get that little pop to the upside here, get our trade at a safe level, and then just let it run. I'd prefer to do that rather than trading down. Just let it run. When stops are at break even, you may as well take the free trade. Now, the reason that I would be doing that is the bigger picture could well be for a bounce down here. We saw what happened yesterday with the price action. The price action fundamentally rejected that lower level. We're not that far away from there, but it may be that we have to come back down and test that level again. I don't know. but it might be that actually we might well start to stretch our legs a little bit from here and get some pretty good price action to the upside. Now stops, we are now slightly in profit, so we want it up here. Let's see if we can get the price back up around about another 70 pips, and then we can move our stops to break even, and then whatever happens. If it comes down and takes us out but carves out another buying opportunity, then that's fine. It's no harm, no foul. But if it comes down, takes us out and keeps going, again, we're in pretty good shape. So we want to pop to about this level here. Personally, I won't be taking profit there. That's another option that if you prefer to do that, you can do that. But I won't be doing that. I'm just going to move stops to break even and see if we can actually get something of a bit of a relief rally. Let's flip to a weekly chart and see why. This is what I'm looking at on a weekly chart. It's Tuesday, and it's really not good to kind of get too drawn into what the weekly chart may look like on Tuesday. However, there is gaps all over the place here. And if we can end up at the top end of the price range by the end of this week, then our trade should be in a really, really good spot for a really good explosive move back to the upside. I know, not saying it's going to come back up here, because everybody knows that every rally is going to be a selling opportunity. So we'll look at this bar as we go if we are still in the trade. If we're not, then we look at Wednesday, we'll look at Thursday and see how we get on with that. But Fed are out tomorrow, so there may be a little bit of positive speculation that could hold the market up at these particular levels. So that is the current plan. We are probably looking for more downside, and it might even be from here. But let's just give it a little bit of room before we do anything. So that's how we're going to manage this trade.
Mate, when do you think you will be looking for reversals? When do you think? I mean, I know you've got the potential for that to go wherever it goes, but are you seriously thinking about reversals at this point, or has the carnage got more to go?
Oh, I think the carnage has got more to go. Yeah, absolutely, mate. I think the best we can hope for at any level down here is just a bit of relief. Just a bit of a relief rally to kind of send us back to the upside for a short period. But yeah, I do think the carnage has got more to go, and it might even be that we bash our heads, bash our feet in this area for some time. But I think we're staying lower for longer, and I think that the thing that's going to probably change that is it doesn't appear at this stage that there's anything that the central banks or the governments can do to reverse the market psychology of getting rid of everything that they have and going into cash. So it's going to be some announcement, I guess, of a diminishing infection rate, or
Americans are starting human trials, they tell me.
Yeah, and I guess that might be the other thing. That's right, in Seattle, but that could take a year to 18 months before we actually see that human trial, that particular what do they call it? That vaccination come to market. So that announcement itself is probably not going to be the thing that is going to help us out. There'll certainly be a little bit of reaction if they come out with something that says, yes, we do have something which is working very, very well. There'll probably be some sort of reaction, but we're still looking a year away from that getting released to market. So with that particular vaccination, I don't think that's going to be the answer. I think it's probably going to be more about, are we starting to see the numbers diminish? Have we got on top of this? Because this is all about, and I go back to it every day. This is all about companies' earnings. And if we hit recession, well, of course we're going to hit recession. I mean, it's kind of an impossibility not to, right? So we are going to hit recession. But the question is, and this is what I said again yesterday, at what point is that already priced in? Because yes, we've got a lot further to come. We've got a bit further to come down, in my opinion. But at what point do we sort of like get new news and new data, which is that shocking? I mean, the Chinese numbers yesterday was absolutely atrocious. So really, we want to see whether that's also going to start to follow through to the American market, because if that does, then we're going to start to see a much graver sell-off. So we're waiting on those number points and those data points turning around. But if they start to diminish the numbers and people start going back to work, that's going to probably start improving the anticipation that business might well start to come through a little bit more. And maybe Donald Trump's announcement about helping the airlines out could help as well.
Ash, what's the time drain on the numbers out of China? How old's the data when it gets released?
The one that was released yesterday. Let me just see what the number was. I can't even remember what. Let's see what it was.
SH1T house. That's what it was.
It was industrial production year on year.
What's the end of the year end?
Source does not release January's data in February to eliminate the distortions caused by the 7-day lunar. So it's not even. So it must be a list that represents the change from December to February. Oh, yeah, so it's pretty
predates the crisis.
Well, no, December's of February, so actually it's fairly up to date.
Yeah, look, I think
it just does not release January's data, but yeah, it's got February's data in there, so it's pretty up to date.
It's interesting because it doesn't release the January data because Chinese New Year was in January this year, but it releases the February data where Chinese New Year was in February last year. So it's interesting. I do think that we'd expect the Chinese data to start and show some signs of improvement. We know that workers are back and factories are opening, and it'll be interesting to see. And I think the market will watch for this. Really, I think the market will watch and see if we get some signs that things are returning to something. They're not going to return to normal, but they're returning to something in China.
Yeah, well, that's the key. Paul, that this will be watched very, very closely because it's the standard, or it will become the standard for time start to time end in terms of peak and when we're out of the crisis. So as it floats around the world, let's say the States went into crisis 3 days ago, then that time frame becomes wherever China was in that relative period. So I think we'll get a far clearer picture if that is indeed the case.
Well, this is the key. And sorry, mate. Just on the point of the data improvement, what everybody needs to be aware of is you're going to continue to look at data, and it is going to look awful. But what you are looking for is it better awful than the previous awful? Because what we're looking for is the trend to start improving. It's we don't want to get caught up with with the actual being read too much. We want to sort of like start looking, comparatively speaking, are we better than we were a month ago? Are we better than we were a quarter ago? And that will give us a signal.
Some of that month-on-month data will lead the way out of this, surely.
Absolutely right. I mean, the last. This is the thing. The Chinese industrial production minus 13.5%. Previously, it was 6.9. Previous to that, 6.2. Previous to that, 4.7. So we were buoyant and then slapped in the face. So it is bad. We are seeing the worst of the data coming out now. The question is, how long does this last? And we just got to watch out for that to see.
Yeah, it'll be interesting to see how other economies deal with it.
Yeah. Yes, it will.
All righty. Hey, guys, have you all gone to sleep? We had about 400 questions at this time last night. You must be intently listening to what's been said. And why wouldn't you? Because I think it's a very, very interesting and more than important topic. PB, I'm glad you're in the room. It seems Ash and I are just going later and later. I think we'll put in for some overtime next week, if that's okay. What's
Look,
1.5 times nothing?
Nice work, Jeff. Look, are we going to start changing the description of the show to make it a little bit longer? Look, obviously we're getting, it takes a while to build following, but obviously each week you get a couple more people, and we've got, we seem to have general interest in the show. I guess after this, perhaps we'll have a quick chat about what you guys want to do around the timing of it and whether it changes. Is it Daylight Saving UK 2 weeks away, Ash?
It's Sunday.
So that will affect timing for next week, won't it? You're a UK Open show, so it'll be a different time. It'll be a different time in Singapore.
Yep.
Yes, it will. I
thought it was
give that information to James so he can let everyone know. It's what they've done now. Every country's different. It's 6th of April in New Zealand. It's it's weird.
Yeah. I'm pretty sure it's Sunday.
I think you're right. I was talking to Chloe about it yesterday. I think you are right.
Yeah.
But
Yeah.
look, I was only joking. I don't think we need to change the time at all. We'll just react to whatever's in front of us. I think that's all.
Yeah, exactly that. You know, if there are questions in the room and we can run around them, then we will certainly deal with them as best we can. And if they're there and we can't deal with them on the day, then we'll put them in the bag and we'll deal with them the next day. So it's no big deal for us.
The formal marketing for the Online Trading Profits broadcast group, which promotes you guys, the formal marketing for that should start also in about a week from now. So we should see a few more people go into that broadcast group and they have the show promoted to them as part of that. So we should see some more numbers come in, and we'll continue to see it improve. One of the things people love quality stuff.
Yeah, well, we try and deliver that. We try and deliver that as much as possible.
No doubt about it. You're certainly going to get more people come as the word gets out. And guys, if you're in the room and you're listening to this and you like it, it's the old thing, isn't it? If you don't like it, tell us. And if you do like it, tell your friends. I think if you're a trader and you get a chance to watch this kind of stuff for free, or to sign up, join into the Online Trading Profits broadcast group and join up to their 2-minute briefs and follow along. And that's still incredibly reasonably priced. I do that and encourage the guys to keep going, give a bit more.
Yeah.
Happy days.
So FTSE 100 trade, I'm closing this out. I don't particularly like the price action here, so I'm closing this out. Now, nobody should have gone in too heavy, as you know. We're coming out, we're going in light as possible right now, just to see if we can actually pick up a trend. Not going to happen, I don't think. We've got around about 15% of stocks currently in positive territory. And just looking around at the some of the sectors, then we're not seeing... I am not seeing those financials do very well. Now, the reason I'm looking at the financials is because financials are traditionally that is cyclicality. When you sort of like think about the business cycle, it's the financials that actually pretty much lead the way when things are in good shape. We did have a bit of a bounce with some of the financials yesterday, but I'm not seeing too much of follow through there. And there's a few defensive names actually that are doing fairly well today. And for that reason, it doesn't suggest a strong run to the upside. So with that, really kind of forming part of the picture, I think it's better that we come out here. Now, it might still be that we get a buying opportunity in this area, but the indication has changed. And looking across the board with some of these stocks, they're also suggesting that it could struggle around here. So if it holds in this area, maybe we try and re-enter. But for right now, I'd quite like to come out and see if there's some more information that we can garner.
All right, mate. Happy days. The euro dollar trade hasn't triggered. The pound US dollar trade hasn't triggered. The Kiwi trade you can cancel from. I'm cancelling mine. You can do whatever you like with yours. I better take the screen, Ash. Do you think?
Yes. I am done. So I didn't even realize I had the screen, but I'm just going to give you that. This is really sort of like what we're looking at. 5-minute chart here is what we were going on before, and this is that there may well be still a carving out here, but just the way that things are looking right now, it's not popping, and it should pop pretty violently if we're getting a decent buying opportunity. So that's the reason of cutting out of this trade for this particular period. And we'll see, it could still hold here. And if it does, then maybe we re-enter, but not right now.
Maybe that flag's a good flag, mate. Who knows?
It's possible. Yeah, it's possible. It's still holding on here. So it still might offer an opportunity, but maybe just a bit later.
Guys, I'm going to leave you guys to wrap it up. I'll talk to you guys a bit later on, okay?
Right, yeah, mate. Happy days. Thanks for popping in.
Cheers, guys. See you.
See you later, mate.
Okay, I'll just wrap it up with these comments, and they are these. As I said, the Kiwi US dollar trade, I think you can cancel because, as I said, it's taken out this low, but I'm not giving up on this. I think this is still absolutely in play as a potential reversal here. So if I miss it now, so be it, but I think the risk now is too high. And what I'd rather see is another one of these bars sitting down here or anywhere, it doesn't matter, and on any time frame. The 4-hour chart, perfect, no drama. Absolutely all over this. So I'm more than willing to get back into this, but for now I think we'll cancel it. and delete the order. That is for now, but only for now. Euro US dollar hasn't triggered. Starting to wander down that way. Our entry's down here, don't forget. And our stop loss is 200 pips above at this level. And what else have we got? Pound, which hasn't triggered yet. No short, no long. And we'll see how that pans out. So look, there's plenty to look at, guys. Not forlorn, not without chances of making some money, but just pick your timing and we'll see how we go. I'm done, Ash. How about you?
Cool, man. All right, mate. Yeah, I'm also done. FTSE actually looks like it might even start moving a little bit lower again here. So I think we've come out just at the right time. Yes, we are done for the day, and we'll be back. Obviously, same trade time, same trade channel, with some more ideas and suggestions. I probably will still look at some stocks overnight. I still like maybe the Ocado trade as well, but I think with Ocado we do need to wait for the earnings now. I've taken the profit on that particular one, but I think if you guys are able to trade UK stocks, Ocado is a food delivery service, which I think in this current climate is pretty popular. And Just Eat as well is another one, and that's a takeaway service, obviously, and it might be a slight, it's a different it's a different thing because it's maybe a bit of a luxury. So be careful with that one. But yeah, there are going to be opportunities out there, guys. All you need to do is try and beat the market with a stock that you quite like the look of.
Get outside the box.
Yeah, exactly. You got to think outside the box in this current environment if you are looking to buy anything up. Selling down here is just a bit low, isn't it? But pops up a little bit, then we can sort of start to become short sellers again. But down here, I'm still looking to see whether there are some stock opportunities.
Happy days, guys. Thank you for being with us. It has been a pleasure to have your company, and we'll do it all again tomorrow at the very same time.
Same trade time, same trade channel. Yep. See you tomorrow at 5 to 8.
5 to 8. There's a date. Don't be late. See you later, guys. Bye-bye for now.